We are back with the co-CEO of the Carlyle Group this weekend, Glenn Youngkin. And Glenn, Carlyle had strong earnings, helped by strong growth, by value of your investments, fees, as well as growth. The lower corporate tax rate in the new tax law obviously helps the bottom line. But I also see a link to the rest of the world. When I was in Davos, I was speaking with some Europeans who said they had a strategy to invest in Europe. They decided, no, we're changing that strategy. We're going to invest in the United States. Yes. So tell me what you're seeing and how this globalized, synchronized growth is affecting how you do business.
Right. So the first thing that we see around the world is the fact that each one of the individual economies are all performing extraordinarily well. And all that does is give us confidence that our global portfolio has got good tailwinds. And that's fundamentally important because we do have a lot of capital to invest. There are good investment opportunities, but it sure is more comforting to invest when you have good tailwinds. Europe is really interesting today, and I do believe that there are short-term shifts that strategists make with regards to, do I want to be heavy the dollar or the U.S. today because the dollar's declined, or that's not the way we think about things. Sure. We're holding businesses for 4, 5, 6, 7 years. We're involved in real estate assets for 2, 3, 4 years, and therefore short-term shifts in I like this or that really don't come into play.
Which is why I love the company, because I don't like knee-jerk reactions, no. And I don't recommend that for anybody.
Yeah, and in fact, what's happened as a result is we can take a long view on what's happening in Europe, for say. So Europe came out of the recession after the U.S. started its recovery, and really was driven by exports. And over the course of the last 24 months, we've seen the consumer economy and the purchasing economy inside Europe actually grow as well. And so our chief economist likes to use the saying that Europe is breathing with both lungs for a change. They have both internal consumption and export growth.
That's good.
That's why the euro has actually risen versus other currencies, because of the strength of the economy.
2% or 2.5% growth in Europe,
absolutely,
right? Okay.
Absolutely. Which, oh, by the way, in the mundane world of pundits saying Europe can never grow more than 1%, this is extraordinary growth.
It is.
And what's most interesting about Europe, Maria, is they did not cut costs because a lot of the social restrictions of taking cost out of companies. And so as revenues grow in Europe, and the cost structures are already inflated relative to where they probably should have been at the lower revenue levels, margins expand faster. And when margins expand faster, we actually have higher earnings growth. And therefore, that's why a lot of people believe over the course of the next 3, 4, 5 years, Europe's a really interesting place to have a disproportionate amount of their investing. Now, the U.S. is still the best place in the world to invest, in our view, just because of the rule of law and the dependency of the economy and the breadth of the economy. But we are really spread around the world. We're very active in Europe. We're very active in the U.S. We're very active in Asia right now.
Yes.
Because we do see this.
Before we leave Europe, I'm being told that France is a real standout right now. I like the fact that Macron is going right after the labor unions and trying to fix the labor market. And the UK is actually the underperformer right now. Does that jive with what you're seeing?
It is. I mean, the UK is the one temporary piece of Europe, soon to be independent, where the economy isn't growing as fast as it is in the rest of Europe. Right. And that has everything to do with the Brexit process, which has real lurches in the progress that they're making. With that said, there's still underlying growth in the UK. But I will say, Maria, one of the things we are concerned about on the global horizon and the global economic horizon is trade.
Yes, good. I'm glad you brought this up.
And one of the real benefits to the economic environment today has been the productive nature of trade and its inflation dampening capability. So in the fourth quarter of 2017, the U.S. economy grew at 2.6%. Purchasing, individuals, businesses, and the government actually grew over 4.5%, but we had a 2% trade deficit. Now, if we were trying to buy all 4.5% of purchasing growth from only U.S. companies, we would have far more inflation because supply would be outstripped by demand. And so I'm not saying that what the president is doing is incorrect in making sure we have free and fair trade, but we do worry that if we swing too far in trade issues, that in fact this global economy, which really benefits from the free flow of goods and services, may in fact be impacted. And so that's one of the areas we're paying attention to. We don't have anything to do. We can't do anything to fix it, but it is one of the things with our companies we're really watching.
You make a good point. There was an op-ed in the Journal last week about Trump and Canada may chill a NAFTA deal. I mean, the NAFTA deal and by the way, the negotiations, another round, are beginning next week in Mexico City. So we'll see what comes out of the NAFTA negotiations. Real quick before you go, real estate. I know you've got a big hand in terms of ownership there. Characterize the real estate business for us. What you're expecting next
we have a wonderfully successful real estate business. In fact, our U.S. real estate business just this past year appreciated at nearly 20% from its fund performance standpoint, which is extraordinary for real estate.
That's fantastic.
We think there's a real opportunity to continue to grow there. The real estate business today is in a very interesting point where you have concerns about interest rate increases and therefore REIT performance over the course of the last 6 to 9 months really being impacted by that, being kind of a counterbalance to the fact that real estate values themselves in a growing economy should be going up. And we think that's creating pockets of opportunity. It's certainly not an overall statement that real estate's a great place to jump into with both feet. But the way we do it, where we systematically pick sectors that we like, medical office, senior active living, certain regions of the country, really does present a chance to take advantage of what we think are some dislocations from pricing, and yet still taking advantage of the economic tailwinds.
And by the way, you're seeing that in healthcare, your investments in healthcare as well. We're living longer, and that's also created opportunities
without a doubt.
For you.
One of the most interesting areas in real estate today is in Europe, actually, because we now all of a sudden have this turbocharged, relatively speaking, economy, and the real estate market there hasn't really been growing at all for the last 5 or 6 years. So we're really active there as well.
Interesting. Glenn, it's great to have you on the program.
Yeah, no, thank you so much for having me.